There are thousands of strategies online, and each one of them claim to be profitable. Whenever a beginner trader start trading, they just think that they could go on YouTube and start searching for a profitable strategy, and then they understand that and start replicating the same strategy, and then would be profitable. That's not true. In reality, if you would like to be profitable, then you need to understand the four pillars of stock market. Welcome back to the Face of Failure. In this video, I'm going to talk about what are the four pillars of stock market, and those four magical skills are not magical. They are as simple as it sounds. First is a chart reading. If you don't know how to read a chart is a language. Those of you who are bilingual or multilingual, they know that they can understand multi-language together. So the same way, chart is a language. You could understand it, you could speak it, you could read it. But in order to do that, you need to start from a very basic level. Now, chart reading, you need to understand how candle formation works. How does candle form? And after forming a candle, what is a trend, what is a trend line, what is a support and resistance, and what to do when supports break or resistance break, how to trade those areas. That all the topic will cover in a chart reading. Now, if you know a chart reading, then the second thing would be money management. Whenever a trader comes to a market and they always wondering how much capital he or she can utilize to make profit. If you are a beginner trader and you would like to start trading, always start with a prop firm. Why prop firm? First of all, let's say if you are coming with $1,000 capital and you are dividing this $1,000 into 20 trades, and let's suppose you are beginner and your risk reward ratio is 1:3, it means in one trade you will be losing $50, or if you are right, then you will be making $150. That's what 1:3 risk reward ratio and 20 trades work in order of money management, right? Now, if you are a beginner trader, then you are coming with a $1,000 capital. But if your 20 trades gone wrong, which will happen, not if, not just once, it will happen so many times. I'm not here to sell you a fantasy. I'm here to give you a reality. I have been trading more than 5 years and I have wiped out my capital so many times. And you will too. But remember that if you are coming with $1,000 and your all trades are wrong, or most of them are wrong, then you will end up losing this $1,000 completely. Instead of this, if you are using a prop firm account, then in $1,000 you can buy 10 prop firm account. And every time you blew up one account, you need to understand why you blew that account. Let me make it very easy for you. So in prop firm, they will give you $1,000. From that $1,000, there will be rules and regulations, and that will help you to be a really good disciplined trader. From that $1,000, you will be able to make $1,000. If you could make $1,000 again and again using this prop firm account, then you will know that now you are good to utilize that money with your own capital. If you can't make money using prop firm account, then you are not eligible to enter in a real market with real capital, because you will lose money 100%. You will need to learn all this concept first, step by step. If you are a doctor, engineer, or an artist, on the first day, would you able to do everything that you are doing right now? Obviously, no. Then when you come to a market, why you are trying to make money from the very first day? First, understand what skills and technical knowledge it does take to be profitable. It will take you couple of years, 3 years, 4 years. The time period is different for a person to person. But you will need to stick with your learning for the rest of your life. For the first few years, you will lose money completely. So in money management, you will be learning what are the capital you are using, what is the risk reward ratio, and how you are utilizing that capital and managing those trades. Now the third part comes is a strategy, entry and exit setup. There are thousands and millions of strategy available on online, but those strategies all claim to be profitable. But is it working for you? If the answer is yes, then only use one strategy at a time. Second thing, if you are a price action trader, which I am, I always do all of my trade based on the price action because it is a core of all these strategies. If you understand how the buyers and sellers psychology work, then you will be able to enter in a market from a point where it's a reversal or kind of a breakout, and you will be able to capture a big momentum like this. Never try to use all the strategies at once. Only use one strategy at a time for either 3 or 4 months and collect the data. If that strategy is not working for you completely, then change the strategy. If it's working for you, then do a little adjustment to make this strategy better. Now, the fourth and the most important part is a psychology. Now, imagine you understand money management. You could read the chart and you know where to enter, where to exit. You have a perfect strategy that will make you profitable. But if your fourth pillar is not the strongest one, which is psychology, then your all three pillars are useless, completely useless. You will need to work on your psychology. Whenever you are entering in a trade, you will have to be 100% conscious and a fearless. There will be a moment where you feel like fear of missing out. It's like you are missing a trade and you need to enter, and then you will enter in a wrong time and you will end up losing. After learning all these three things completely, still you would be losing money because your psychological aspect is not good. How to improve a psychology? Every time you will enter in a trade, you need to mark down your emotions. You need to analyze your emotions. When you are in a trade, how your emotions is working. Is it fear? Is it greed? Is it the opportunity missing? What you are feeling when you are in a trade? If your heartbeat is going up, what is happening? It could happen that when you are paper trading, your psychology are perfect because the money is not intact in paper trading. But when you trade with real money, now money is involved, and when you see those numbers are fluctuating a big, then you will freak out and you will start losing yourself. And in that fear, you will make a bad decisions, and then you will end up in a losing side always. That is a story of 95% of trader. You will have to be emotionless when it comes to trading. Completely neutral. There is no emotional space in trading. The way you will handle your life is the same way you will handle your trading career. If you are very emotional in your life, then you will make emotional decision in your trading career, and that will ruin your chances to be profitable. First, you learn about market, learn about yourself, how you are reacting in certain situation. So constantly putting yourself under stress, under pressure. You could do that using a prop firm account where you will not lose too much money. Once you will figure out what's your psychological error is, then it will take 6 months to 1 year to work on your psychology. Imagine a building construction. When in your foundation, if your all four pillars are not strong enough, if you have not worked enough on that pillars, and you have started to building the upper floors, then they are more likely to fail down in the future. You will have to work on your all four pillars of stock market. This is a foundation: chart reading, strategy, money management, and psychology. In my future video, I will explain in the live trade how psychology works, how do you think, and how to control all of those things. For now, see you tomorrow. If you like this, please like and subscribe. See you.